Good afternoon. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me for our final hit of the week as we wrap up the markets is Chris Dearborn. He's managing director of Nasdaq's Markets Intelligence Desk. Chris, as always, thank you. My favorite hit of the week, because I know it's time for the weekend. You guys had a crazy week, particularly the listings team.
The listings team had a fantastic beginning of the year and a fantastic 2 weeks. We had 13 IPOs this week. We had 7 yesterday. We had 4 the day before, 1 today. We had another 1 on Tuesday. We've done 93 IPOs year to date here on Nasdaq, and the engine doesn't look like it's slowing down. So it's a great job for the capital markets team, and we really want to thank all those companies for picking Nasdaq as your listing exchange. All
right, so we're closing out the week on a green note, seeing stocks build on gains from Thursday.
So what we've had really is negative sentiment beginning of the week, but volume's been pretty good. We had a record-setting Russell rebalance last Friday for the quarter. We did 10.6 billion shares of consolidated tape, which is the highest volume date for the quarter, and today is the end of the quarter, so volumes look to be a little bit lighter. But what we saw was a little bit of follow-through on top of that, and a little bit of negative sentiment towards the markets. We were kind of open flat, sometimes higher, and sold off almost every day. But volume's been pretty good. We've been tracking towards, for the entire week, with the exception of today, coming into the potentially long weekend next week with the holiday week, of about 6.5, 6.6 billion shares of consolidated, which is a little bit above average, and actually higher than the entire month average of April.
Right.
So right there, you're seeing sentiment kind of pick up. People are trading stocks. Not saying the volatility is really back into the market because the VIX is still kind of tracking low, but the S&P has been kind of on a rut for a while. The financials have been kind of on a rut for a while, and with that, you're seeing people sell the open, and it sells off into the close, with the exception of yesterday, with momentum building up again into today. So the markets have peaked a little bit higher. We're about 3/4 of the way from where we were at the peak earlier this morning, but we look like we're going to have a solid close here.
But I would argue sentiment kind of, it still feels a little bit soft with trade war concerns, of course, and trading tariffs back and forth. That's got to be an underlying concern.
Anytime you layer in those macro sentiments and uncertainty comes to the market, traders do not like uncertainty, and they sell uncertainty. They like soft baby steps, that Goldilocks type of mentality where everything is predictable. And when you have the potential of a full-blown European or full-blown Chinese trade war going on, you're going to have issues. You have issues. Harley-Davidson setting up shop over, and you're potentially there. That's kind of something that the president's kind of attacked a little bit. Really, what they're doing is best for their company. He's attacking them on that trade war mentality, and again, people are seeing that as a negative to the markets.
Of course it's negative. It's negative not even just for the markets, but who we are as a democracy. That's a different conversation.
Yes, it is.
Moving along. Financial sector weakness, down almost 13 straight, down for a record 13 straight days. We're finally getting a win. Yesterday, Fed stress tests were out, and that was relatively quiet. They used to really make the news.
It was a 2-stage test. So the first Fed stress test was the week before. All 35 banks passed in glowing colors. The second part of it was kind of a little bit of a different story. So that's the part where they look at returning cash to investors in the form of buybacks and dividends. And 3 of the major banks did not do so well in there. And one of them really kind of failed that test. So what you're looking at there is negative sentiments from the larger banks, that too big to fail mentality. And with that, you had really kind of a negative outlook into that financial sector. The S&P financials have been down for a record-setting number of days. Granted, we're up today. All sectors are in the positive right now. We'll see how that goes into the close. But right now, maybe we've bottomed them out there, and all the bad news is finally out. Again, people wanting to know definitively what's going on. They don't want to speculate.
All right. Bonds, oil, U.S. dollar, all trading higher. In fact, oil hit a multi-year high. And but this is a question I want to ask you. If it gets higher, that means the price of the pump gets higher. That's going to hurt consumer pockets. That will impact GDP.
Right.
So it does come back to the consumer.
Right. There's a lot going on. We got non-farm payrolls next week. We're going to give her a clear look at that. At $74 a barrel for oil, the amount of money that people are spending at the pump is taking away exactly from that other discretionary type of items. And consumer discretionary has been the second best performing sector in the U.S. For the year, behind tech. And that's kind of a strength item for the growth of this economy. 2/3 of U.S. growth comes from consumer discretionary spend. And if they start spending less, though they are spending more at the pump, the problem is that's costing more, so that margin's not there for the companies to take the profit, and the person's not going to have that much more money to spend on shorts, bathing suits, and suntan lotions at the beach this summer. So with that, you're going to have more of a micro spend as opposed to a more macro look at items there. So it's kind of a strong negative.
All right, and as you had mentioned, we have non-farm payrolls, a key employment report on Friday. Virtually the trading calendar is completely empty. So on that, I will wish you a great weekend and wish everyone else a great weekend. As a reminder, equity markets close at 1, bonds close at 2 on Tuesday, July 3rd, and U.S. markets will be closed in honor of the July 4th holiday. From the Nasdaq market site in New York, I'm Jill Malandrino, Global Markets Reporter at Nasdaq.